Hello, friends. So one of my ex-subs hit me up and said, hey, you're posting a lot of your ideas around Ethereum. It seems like you're changing your mind on Ethereum. Really proud of you. Peace. Thank you. Really appreciate that. I mean, you guys know Ethereum burned me a long time ago, and I made a philosophical decision that I would not support it because the leader of Ethereum, Vitalik Buterin, decided to go God mode and roll back the chain, which means that it's completely centralized and we just have to mentally assent to that reality. Now, I have been doing experiments since 2021 on staking on multiple Ethereum-esque type of tokens, right? So anything that is proof of stake. And I've had some pretty significant success over the last 3.5 years staking. And it's been a great education. And so now with that Bitcoin ETF has passed, there is significant tailwinds that are going to help Ethereum create. Well, they're going to create an Ethereum ETF as well. And so the monetary opportunity is really what I'm looking at. And as you will see in this summary of videos, is kind of my thought process of how I've changed my mind and how I've been really going down the rabbit hole for the last 30, 60 days and reintroducing myself to Ethereum. And so ex-subs hit me up and said, hey, you're posting all these videos. Do you have like all of them in one shot? And I said, well, that's a great idea. So here you have it. Here are the last 5 videos about my mind thinking about Ethereum, also as a function of how much value I've been able to create through staking mechanisms, and how it's moving my brain towards the imminence of Ethereum ETF and what that will hold for the overall macro markets. So obviously, as a venture capitalist and investor, I'm here to make money. So if Ethereum, which I have talked about before, I look at Ethereum as a call option on Web3. That's what it really is. It's an index fund for Web3. So that's my new mental model of how I see Ethereum. I see Ethereum as a collective, right? The entire ecosystem. And so if you're betting on Ethereum, if you're betting on Web3, then Ethereum could be an abstraction of that bet. Meaning, if you think Web3 is going to grow, if you think Web3 is going to stay around for a long time, if you think Web3 is not going to go away and it's going to expand and grow, that is what Ethereum in all their permutations and all the tokens and all the second layer applications, all that stuff, that is all in the world of Web3. So, is that basket of goodies in Web3 going to amount to anything? I think so. So here you have the last 5 videos all in one big shot for those who want to listen to how my research has gone and how my mind has been changed. Enjoy. Well, it happened. I knew it was going to happen. It's just a matter of time that the Ethereum ETF is on its way for maximum approval and maximum acceptance. Just like the Bitcoin ETF, things are going to get really interesting, right? And so, as you can probably imagine, I have been deep diving back into Ethereum for the last 30 days, and I've come out of it. I have 3 very interesting videos to give you guys. Ex-subs first, so the rest of you guys will get it after. But I'm going to give you the overview now. Vitalik must be very happy, especially with this SEC approved. They've approved all Ethereum ETFs. Let's delve into the specifics of these ETFs, my friends. Let's do it. So, very simply, the SEC has approved all spot Ethereum ETFs, a historic decision that comes 5 months after the approval of the spot Bitcoin ETFs, and this is the reason why I've been going down the rabbit hole. This is the second crypto-based ETF approval in the US, further increasing Ethereum's accessibility for institutional investors. In terms of the applications and approval, there has been 8 ETF applications, including Van Eck, BlackRock, and Fidelity. They all received regulatory approval this last week on May 23rd. Hashdex was the only issuer not approved that day, but I promise you they're most likely going to be approved. Despite the approval, the instruments won't be available on exchanges immediately. Applicants must first secure approval S1 registration statements, which could take a few weeks to several months. I'm expecting several months. In terms of my timeline, now I'm no expert here in ETFs, but in terms of my expected timeline, and this is mostly coming from a couple of analysts, Bloomberg analyst James Seffert says that the approval process for S1 regulation statements could take up to 5 months. Bloomberg analyst Eric Balchunas predicts mid-June, though. So, some people are moving fast, some people are moving slow. Could be 2 weeks, could be 2 months, could be 5 months. Regardless, you're not here for that. You're here for the market reactions and the projections that is going to come from this. The market's reaction to the SEC's approval has been, let's be honest, it's June 5th, relatively mixed. Ethereum's price has increased just about 1% following the announcement, trading at about 3,800 at the time of approval, and later dropping 3.5% to 3,700. If I'm intellectually honest, that's where I bought some. Expectations for spot Ethereum ETFs are high, with analysts predicting that they could attract 10 to 20% of the flows similar to the spot Bitcoin ETF. Now remember, the spot Bitcoin ETF has accumulated over $13.3 billion in net inflows, suggesting spot Ethereum ETFs could potentially see about $2.66 billion in inflows relatively. In terms of some of the challenges ahead, well, there could be some significant ones. Although the approval is a significant milestone, and for many Ethereum heads, you guys are going to be very happy with this, there are going to be some challenges ahead, at least from what I see. The SEC's approval came from its Trading and Markets Unit, and the SEC Commissioner can change this decision within the next couple days or so. Additionally, the process of securing an S1 registration statements could delay the ETF's availability on exchanges. Applicants like Van Eck have quickly filed their amending S1s following the 19B4 approval, and other applicants are expected to follow suit. Now, there's a big consideration, and they talked about it, the Bloomberg analysts did, in terms of the surveillance and market integrity and how this is going to essentially affect the overall meta of the market. Now, the SEC was impressed by the ETF applications from issuers such as Van Eck, ARK 21 Shares, Hashdex, Invesco Galaxy, Franklin Templeton, Fidelity, and of course, the reason why we're all here, BlackRock. These applications demonstrated comprehensive surveillance sharing agreements with the Chicago Mercantile Exchange, or the CME, through their common membership in the Intermarket Surveillance Group, helping prevent fraud and manipulation. All that to be said is that it seems like the applicants for these Ethereum ETFs have done their diligence effectively well, number one, and number two, they have been absolutely thorough in their entire prospectus for the risk and security considerations of allowing the world access. So, I've been spending about the last 30 days or so really digging into this, and I've put together some really interesting videos. I'll give you the titles here now, just so you can think about what I've been thinking about. The first one is Ethereum a bet on Web3? The second video I'm going to send you guys is 10 thoughts on Ethereum adoption. I haven't thought about this in a long time. And finally, while we're all here, Ethereum ETF. I have 6 ideas as to why this could be an exceptional market play, but I also have 7 questions that I think are worth noting. Could this Ethereum ETF be a game changer? If you follow Elliott wave patterns, right? A fancy way of saying, essentially market sentiment and the emotions of the market. I'll tell you, this Bitcoin ETF and now this Ethereum ETF, they have created some frothiness, some And they have moved the Bitcoin, at least the Bitcoin price, outside of the expected trajectory that at least I was expecting. So I wonder, what is Ethereum going to do to Bitcoin? That maybe my mind is shifting over to the utility and value of Ethereum as a function of how much staking rewards I'm earning? You know, with the Bitcoin ETF off and running, and now we have new markets entering into this game of the Bitcoin ETF, I've begun to turn my view, as much as it was a little bit unnatural for me to do so, but I've begun to turn my view towards Ethereum. Now, yes. For those of you guys who've been with me for almost a decade now, you know my thoughts about Ethereum, because you guys know that I got rug pulled by Vitalik Buterin himself when the exchange that I was a part of got bamboozled, and he decided to roll it back. And that essentially, let's be intellectually honest, put Ethereum into a position where Ethereum is centralized. Period. Full stop. So, if we can all agree on the reality that Ethereum is centralized and is not truly decentralized, and we're okay with this, and the reality that unsophisticated policymakers, unsophisticated individuals, unsophisticated people who are pushing for Ethereum's growth will continue to push for Ethereum's growth, and they will win. And so, as a collector of data, as a collector of information, so that I can amalgamate, conglomerate, congeal all the data together, do my data analysis on it, and understand the markets that I must attack as a venture capitalist and investor, it's time in 2024 to start. I'm hesitating to say it, which is crazy, and of course I've written a script here around it, but it's time to start looking at Ethereum as a mechanism of value creation, right? As a mechanism for value growth, right? As a mechanism for monetary, growth, these types of things. I just have to admit this. And so we all know that Bitcoin is digital gold. That is the narrative. That's the narrative of Bitcoin is digital gold. Peace, table stakes, we get it, makes sense. I read an article recently that said that Bloomberg said that Ethereum needs a simple narrative so that people can understand, why would we want this asset class? Why would we want all of this market cap? Why would we want this technology to proliferate? Right? And so it's easy with Bitcoin. Bitcoin is digital gold. And Bloomberg says Ethereum needs a simple narrative. While Ethereum, in my opinion, is relatively, I'd say, hard to describe in one line. Here's a try at it. Ethereum's simple narrative could be a high-growth index fund for Web3 adoption, or a call option on Web3 adoption. A call option on Web3 adoption. So let me explain this, okay? Web3. We already know Web3 is the next iteration of the internet, in which we introduce global accounting ledgers and user-controlled data, digital property rights. This started in 2008-2009 with Satoshi Nakamoto because he started Web3 and digital sovereignty. The global accounting ledger equals the rails or infrastructure on which the next iteration of the internet commerce will take place. The Ethereum ledger, as I am seeing it today and as I am thinking about it and analyzing it, the Ethereum ledger today has the potential to do several things. So let's go through them. Number one, securely connect 8 billion people globally. It could. Could Bitcoin do that? Sure. Could Ethereum do it faster? Maybe. Number two, securely store and transact all of the world's financial assets in a peer-to-peer manner. Bitcoin's a little slow sometimes, but it's an asset It's a store of value. It's digital gold. You really shouldn't be moving it anyway because you don't want capital gains implications. So Ethereum and Ethereum's abstractions, all of the token projects on top of Ethereum, could truly store and transact all of the world's financial assets in a true peer-to-peer fashion. Could it be true? Institutionalized so? Potentially. Number 3, remake business models across several industries via the introduction of smart contracts and digital property rights. Now, you guys know we've been talking about Ethereum and smart contracts ever since it came out, and how smart contract growth increased over the years. Abso-freaking-lutely. Are we seeing multiple ways to create abstractions, permutations, different permission functions, filters, use cases, examples? Have we seen all of that grow in the market around smart contract functionality? Absolutely we have. We've seen it all. And much to my chagrin, it continues to grow anyway. Number 4, Ethereum could transform B2B interaction with shared accounting ledgers with automation via smart contracts like ERP or B2B interactions. So what this means is that, you know what? If we can have these shared ledgers across multiple industries, multiple partners, businesses, entities, etc., it could create and be a trusted ledger across these multiple entities that can actually be used for real commerce, trade, digital pulling, data pulling, all that stuff. So could Ethereum be that bridge? Maybe. Number 5, Ethereum could house the global financial services industry for payments, trading, settlement, custody, lending and borrowing, and ownership records. It could truly be the mechanism in which all of these can interact, interplay, and work together. Number 6, transform business industries like digital art, obviously, collectibles, NFTs, gaming, brand loyalty, advertising, digital content, social media, web hosting, and cloud computing business models, creating new net markets on their own. So, as much as much to my chagrin, Ethereum is something that will not go away. It's almost like that one systems law, right? I forget what the name is, but essentially the systems law goes like this, is that the longer the dysfunctional system is around, the more that it'll persevere to be around. It's kind of like classic ASP or COBOL, or do people still use Cold Fusion, Dreamweaver? Like the old legacy codes are still around, and they're still around because they're still useful and they don't break. And so Ethereum is, in my mind, as I'm categorizing it at a data level, Ethereum is one of those things that it's just not going to go away. And so can we poo-poo some of the, let's just say, foundational elements that underpin it? Are there inherent risks with centralization and this type of control mechanisms that control Ethereum? Yes. But is there opportunity to profit? Is there opportunity to make money? Is there opportunity to build on it effectively? To this, I must say, I have conversations with people who are Bitcoin maxis all the time. And people tell me that I'm not a Bitcoin maxi. They would be correct. I am not a Bitcoin maxi. Now, I think a Bitcoin maxi is a very antagonistic position to be in. And guys, please. I'm not trying to rationalize anything here. Just hear me out. Like, Bitcoin maxi, what does that mean? Bitcoin above all else. Fair enough. I agree with that. The difference is you guys only buy Bitcoin. Fair enough. I'm willing to build on other systems. I am system agnostic. Now, have I personally been burned by the owner of Ethereum, Mr. Buterin? Yes, I've been burned. That's why it was always hard for me to participate. But that's almost a decade ago. And time has passed. And Bitcoin is ripping. It ain't going away. And Ethereum, likewise, is not going away. So let me give you a couple questions that have been on my mind when it comes to Ethereum and Ethereum's narrative and where it might go in the future. Let's talk about it. So here's a few questions for us to consider. How much should this global accounting ledger of Ethereum be worth? If you're thinking big numbers, maybe that's rationale enough to get in. Number two, does it have a larger addressable market than Bitcoin? That you could make a very, very good argument that more people will have access to Ethereum than Bitcoin. Number three, what does the competition look like? Guys, I've been in this game just as long as you have, maybe even longer, right? We have seen the interoperable networks and blockchains that were going to be the Ethereum killers, right? We've been through all of them. Do you remember Ubiq? Do you remember EOS? Do you remember AntShares? Now Neo, right? Do you remember Icon? Do you remember Cardano? Do you remember, right? I mean, I could go back and back and back and back and back. Ethereum's, the point is I'm actually making a solid argument for Ethereum being the survivor, okay? Number next, does Ethereum capture value from its adoption? That's the final question. Does Ethereum and Ethereum holders capture value from its adoption? If I've learned anything about the world of staking, which by the way I'm deep in, I have lots of nodes. If I've learned anything about the world of staking, am I making most of my staking revenue on the Ethereum and in the Ethereum world? Yeah, absolutely. Absolutely. And I think that reality of running my own nodes and staking and compounding yield in the Ethereum world, the ERC20 world, could it be said that maybe my mind is shifting over to the utility and value of Ethereum as a function of how much staking rewards I'm earning? What do you guys think? And so I am slowly, let's say, digging my way out of my hatred for Ethereum. So, as I've been noodling on Ethereum, as you guys well know, I put together a list of 10 things, 10 current, let's just say, wind in the sails of Ethereum as we are getting closer to the Ethereum ETF. And maybe even, yes, so let's talk about it. Let's just jump right in, guys. No fanfare. Here we go. Number one, when it comes to the momentum of Ethereum, when it comes to the growth of Ethereum, when it comes to the tailwinds for Ethereum, number one, Coinbase is pushing its users of over 100 million verified users on chain to Ethereum via Base L2. If you haven't looked that up, you should. Number two, the Ethereum Foundation continues to execute the merge, the Shanghai upgrade, EIP 4844, etc., etc. Yes, I've been keeping up on it, guys. The network is scaling in a incremental and modular format, which is actually pretty important. The modularity allows for flexibility. Number three, network effects. Ethereum dominates in terms of developers, developer tooling, standardization, liquidity, value locked users at about 120 million, right? Wallets, and obviously fees. Number four, Token economics. Ethereum burns or buys back approximately 80% of user transactions, which can offset new issuance and consensus rewards paid to validators. The token had an annualized deflation of negative 0.38% in quarter one. Something to note. Number 5. Yield. Ethereum offers a real yield driven by its usage, user fees, plus the network consensus rewards, which is offset by buybacks. So the, let's just say, monetary incentive to stake and to use Ethereum is still pretty good. Number 6, security and pseudo-decentralization. Per a recent study by Coinmetrics, it would be more costly to attack Ethereum than Bitcoin, though both would be impossible to attack, in my opinion. I just think it's a foolish errand. Number 7, Ethereum is generally uncorrelated to U.S. securities, something that I've been looking into and seeing the trends in how this works. It doesn't seem to be ridiculously correlated to U.S. securities, which is always a good thing. Number 8, applications. Today, from my research, there are over 7,300 apps running on Ethereum. That's a lot of apps. Pretty good. Doesn't beat the App Store with, 7,000 apps coming out a day? Something like this. But it does have a large moat, a large network and entrenchment. Number 9, capital efficiency. There's more Ethereum on-chain today, providing services, liquidity, used as collateral, etc., than at any point in the network's history. I had to look this up. And number 10, the supply of Ethereum held on exchanges is currently at its lowest point since 2016, which means people are hodling it. And maybe, just maybe, as they hodl it, it will continue to go up in value and utility, hopefully. You see, as you guys well know, because you guys walk with me through lots of different experiments and lots of different navigations of the markets, you've seen me deep dive into crypto, Bitcoin, obviously Bitcoin mining over a decade now, Bitcoin over a decade now. You see me dive into AI, these types of things. Like, I get rowdy. I get deep down the rabbit hole. And guys, I am committed to really understand the deeper value propositions of Ethereum and trying to keep my heart open as I am. Yeah, that's it, man. Trying to keep my heart open because I was burned, as you guys well know. I was burned by Ethereum. I was burned by Vitalik. The philosophical tenets that were so espoused were destroyed and they were trampled on. And so I am slowly, let's say, digging my way out of my hatred for Ethereum. And like I said in my last video, mostly because the monetary incentives and unit economics of staking are so good. Maybe you should ask me about it. I really feel almost responsible that I need to appreciate Ethereum for what it's done. You know? The Bitcoin ETF has come and stayed. Now, the Bitcoin ETF is part of the market landscape. It is part of our mental models. It is part of our worldview. It is part of our reality. And we are seeing day by day new countries, new markets, new locations that are opening up to the Bitcoin ETF. As I have been struggling, my friends, as I have been struggling with all of my deep diving research, reintroducing myself to the Ethereum world, obviously participating in staking for a long time, and benefiting greatly from these altcoins and the staking mechanisms that provide us so much yield. Anyway, so as I am relearning about Ethereum and reintroducing myself into Ethereum, I finally have broached this idea of what happens when the Ethereum ETF pops. I wrote a couple ideas down. Let's talk about it. So here are my current thoughts on the potential flows into the Ethereum ETF when it starts trading. But first, let's set the benchmark. Bitcoin, of course. Bitcoin is number one, 3 times the size of Ethereum in terms of market cap. Number 2, the future contracts trade is 10x the volume of Ethereum. Number 3, spot trading has about 2x the volume of Ethereum. Number 4, Bitcoin has seen 13 billion of net flows since the ETF launch, which increased the unit price by about 75%. Not bad. With that said, while it's still a little bit misunderstood, Ethereum is quite differentiated from Bitcoin from my research in regards to the context of ETFing. In terms of this asset itself, as well as the utility of the Ethereum network. Number 1, Ethereum doesn't have anywhere near the same amount of structural selling of Bitcoin, since Ethereum validators do not incur operating costs as Bitcoin miners do, forcing them to sell a percentage of their mined coins. This is something that we need to remember. As a Bitcoin miner for over 10 years, it is the cost of doing business, just like mining gold. There has to be inputs so that you can get outputs. There has to be energy expended, costs expended, so that cost and energy can create value. Ethereum doesn't have that problem because they can just yield stuff out of nodes ad infinitum. Number 2, 38% of Ethereum supply is currently soft locked on chain, earning yield. Come on, guys, that's why we're here. Earning yield while being held within staking contracts, DeFi applications, and acting as collateral, etc. Number 3, Ethereum balances on exchanges is currently at its lowest point since 2016, about 11% of the supply, much less than Bitcoin. Number 4, Ethereum is more flexible than Bitcoin. This reflexibility could be expressed with price-leading on-chain activity, which leads to more Ethereum burned, which can further drive narratives, more price action, more on-chain activity, and more Ethereum burned. So I kind of think this eventually leads to like a Larry Fink on national TV talking about Ethereum and its potential to become the new rails of finance, right? Like this is when the talking heads jump in and they're like, yes, this is what we should do. Okay, hold on to your butts. Hold your horses. Number 5, Ethereum is a technology play. On top of the growth of Web3, in my previous video, I called it a call option or a high growth index for Web3 adoption. There are a lot of people who believe that because of this, Ethereum ultimately has a larger addressable market than Bitcoin. Now, does it? Well, Bitcoin has one use case. It's a store of value. Does Ethereum have a multiplicity of use cases on the second layer? Yes, they do. Number 6, Ethereum has superior network effects and fundamentals while offering stakers of the asset a yield, which is not currently available in Bitcoin, right? That yield, guys, is so strong. And as I pause and think about that, some of you guys might know, you guys remember my experiments with staking. I haven't quit. I've been doing that for years now. And frankly, it's working. And so I really needed to understand as kind of a forced mechanism, right? Because I've been staking for so long in a multiplicity of different tokens and earning yield. Exceptional. I really feel almost responsible that I need to appreciate Ethereum for what it's done. Here are a couple questions that I wrote down in my journal. And I think these are good questions to ask, given the structural differences of Bitcoin and Ethereum. So, number 1, what percentage of Bitcoin ETF holders could rebalance into Ethereum? That's a thought. It makes you wonder. With the rise of a Bitcoin, or with the rise of an Ethereum ETF, how many people will rebalance from Bitcoin ETF into the Ethereum ETF? The inflows could be interesting. Number 2, what percentage of investors could look for a 50-50 allocation to Bitcoin and Ethereum? Which, frankly, based on very simple maths and simple logic, it's not a bad balance. 50% Bitcoin, 50% Ethereum. But for those that know, this is going to change the market caps and the dynamics of the market, right? As they balance. Number 3, what percentage of investors could outright opt for Ethereum over Bitcoin just because it's Ethereum, it's cheaper, and all of the simple reasons? Number 4, if momentum hits Ethereum, will we see the reflexibility flywheel kick into gear? Because we didn't really see that with Bitcoin, right? We didn't see it with Bitcoin, period. And so I'm beginning to get curious about this idea. Could we see a hockey stick moment? Number 5, how many institutions are on the sidelines now, having missed Bitcoin? Will they go all in on Ethereum? Given Ethereum's smaller relative size, what happens if Ethereum gets 40 to 50% of the Bitcoin ETF flows? Another explosion? And finally, number 7, what could the altcoin rotation look like amongst ETF holders in this next cycle? How will we see this Bitcoin? I keep thinking, clearly the Ethereum ETF isn't out right now, so I keep defaulting to Bitcoin ETF. But when the Ethereum ETF launches, I'm really curious, because Bitcoin is just Bitcoin, and then there's Bitcoin ETF, an abstraction of Bitcoin. And we have Ethereum, but we have all this Ethereum ecosystem, apps, and all this stuff, different tokens. What's going to happen when that Ethereum ETF launches? How is that going to affect the entirety? Because the entire Ethereum ecosystem is a complex system. And you guys know that in complex systems, everything affects everything. I am super curious. If I were to summarize up these 7 questions, if I were to summarize up my thoughts about the Ethereum ETF, it seems like something that you probably wouldn't want to bet against. Let me know your thoughts. What do you think? Am I wrong? You know what, guys? I've been thinking. And I have this feeling in my bones. A feeling in my podgies, if you know what I mean. So did crypto just enter a turning point? It's almost like the universe has shifted. There's been a shift in the polarities of magnetism, and I don't know what I'm talking about. But regardless, though, this is something I've been speculating about and kind of noodling on for about the last year or so. Certainly, well, not half a year or so. You know, my thinking has been informed a lot by the framework laid out by Carlotta Perez in the book Technological Revolutions and Financial Capital. You can see it here. The core idea is that revolutionary technologies typically go through 4 distinct phases as they are implemented and deployed. Number 1, the interruption phase. Number 2, the frenzy phase. Number 3, the synergy phase. And number 4, the maturity phase. In between the frenzy and synergy comes the turning point. These turning points typically occur during the hangover from the frenzy period, like 2021 for crypto. This comes after financial leverage is wiped out. Consumers are hurt, frauds are exposed, and lessons are learned, as you guys well know through the 2022-2023 season of scammery and SBFing. These periods of sobriety tend to be highlighted by regulation and policymaking, marking the end of the installment period and the beginning of the development period for new technologies. This could be, my friends, as we are moving into 2024 and beyond, the hockey stick moment that I have been talking about. And for those who have been listening to me for years, you know I have been trumpeting. Given what we've seen in just the last weeks, just the last months, I think it's safe to say, and of course I'm just one human being out of 8 billion people on this planet, but I think we are getting over that turning point, my friends. And so the question is, with Bitcoin sitting at just around 70 grand or so, what's the next pop? Man, and it's election season. Man, oh man. 2024. It's going to be a doozy, guys. Hold on to your podgies.